Hello smart money traders, welcome back to the channel. It's Solomon here. Let's quickly do a top-down analysis on the dollar index and GBPUSD to determine their weekly directional bias for the week. We were supposed to do this yesterday Monday, but something came up, I couldn't do that. So today Tuesday, it is also important that we do this. So if you're trading any dollar related pair or any asset that is directly correlated with the dollar, it's important you do this every week so you can have an idea of what may be unfolding for the week. So the dollar index is an indices that has a direct relationship or measures the performance of the United States dollar and measures the strength of the United States dollar. So let's get into that. We're going to go from a higher time frame to a lower time frame to know exactly what we are doing, and then we're going to do it on GBPUSD. To find the dollar index, you simply go to tradingview.com and search for DXY. You're going to find it. This is the particular asset I'm talking about. So let's start from checking our economic news to have an idea of what may be unfolding over the week too. So the economic news gives you an idea of the fundamental analysis that you should be doing, and you should be focusing on high impact news that has to do with the dollar. If you see this red shaded portion and orange shaded portion, it simply means high impact news and a medium impact news, and you want to pay attention to them. And then you focus on the United States dollar alone. So you check for the whole week, and then if you see any day that has a high impact news, like this week, you can see we have quite a number of high impact news on the United States dollar. So let's get back to that. So starting from the monthly time frame, let me take out this so we can have a better view. What we're going to focus on is to basically focus on the most recent data. This is the most recent data. We're paying attention to this. But before that, you can actually see that price have traded from here to here. This is the range that price have traded to. As price traded from here to here, we're going to measure where price is at currently. And then to do that, you simply pick your Fibonacci tool, measure from this swing low to this swing high, and then you're going to get where price is at currently. This is just your Fibonacci tool, and middle of that Fibonacci tool is called your equilibrium. Above it, anything from here and above is called a premium level. Anything below here is called a discount level. And the rule of trading is that you want to buy at a discount and sell at premium, and that's basically what that means. So as price traded right into this level, we just saw a quick reaction from here, and then we have seen a shift in market direction down to this level. What happened? If we zoom in, we're going to actually see that price have actually traded into this all-time mitigation block. This is the mitigation block. As you can see, price have not taken out this high right here. So that's how a mitigation block is. And then price have traded back over some few months into this area. So let's look at what is happening at a discount area. Right at this discount area, we have something called a fair value gap. This is the fair value gap. Price actually traded into this fair value gap with this particular order block that you can see. Let me just mark that order block for you to see. This is an order block, a bullish order block. So price is precisely trading into this institutional reference point. So let's focus on what is happening right here. From here, we see price trading right up to this place and then traded into this volume imbalance. Let me show you. I've shown you this time and again. This is a volume imbalance. It's a price action that involves only the wicks that are in your candlestick. Let me show you that. Can you see? The bodies are not connected, only the wicks are connected. Unlike this price action where you see the bodies are actually carefully connected, this is also a volume imbalance where you can see a gap in between, and then you have the wicks being connected. So after price traded into that, we have seen a sudden push down, and then it pushed down and peaked liquidity right below here. If you look at this candle, it's lower than this. So that means liquidity has been taken right below this place. If you put this line, you can actually see that it has actually pushed outside that. Let me just zoom in, and then you're gonna see it. We can see price have taken liquidity here. So what are we watching right here? We are watching this monthly candlestick printing a very aggressive bullish candle, and then right above here there is liquidity residing above these relative equal highs, and then there is a very massive fair value gap right here. Let me show you that. This is a fair value gap. Okay, so price is trying to reach out to liquidity above relative equal highs, fair value gap, and then a bearish order block. This particular huge green candle. So this is what the monthly is actually telling us. So now let's go down to the weekly time frame and look at what is happening from the weekly time frame. Now from the weekly time frame, we're basically watching this price action. Remember, I told you that as soon as price came into this level, let me delete everything so we can have a very clear chart that we can work with. So as soon as price traded into this level, we have grabbed liquidity right below here, right here. Let me show you. Liquidity was grabbed right below here, and then liquidity also residing below here. So all this place liquidity was grabbed, price took out external range liquidity, is coming back to an internal range liquidity. Price takes external and come back to an internal range liquidity. An internal range liquidity can be in form of fair value gap, order blocks, and any of the strongest institutional reference point you can see there. So right here you can see price have traded back into this order block. Let me show you this bearish order block. Price has basically traded into this particular bearish order block, okay? And then with this small fair value gap, you can see right below here, fair value gap. So we are expecting price to react around this level. So from the monthly we are bullish, from the weekly we are bullish. Now let's put it in order. Monthly we are bullish on the dollar, and then weekly we are also bullish on the dollar. So since we have monthly and weekly, let's check the daily time frame and see what is happening. So we go down to the daily time frame. Now look at what is happening from the daily time frame. Okay, let's have this cleared first before we can make any analysis. So price has been trading, change direction from here. This is where we see a change of character or market structure shift, as easy as that. Market structure shift or a change of character. Price is trading right into this area. Look at a volume imbalance, this place. So this is where I'm seeing price trading into, or this particular breaker block. Look at this. Price have actually even traded into this particular breaker block right here. So we are waiting for price to reach this place or to even react from there and start coming down, okay? Because this is where the internal range liquidity, and also the daily is also bullish. We have bullish monthly, bullish weekly, bullish daily. Let's check the 4-hour time frame and see what is happening. Okay, so what you do with all those information is to have an idea of what you should be doing. You shouldn't be bearish if the markets are bullish. You shouldn't be bullish if the markets are bearish. Okay, so looking at this, we can see a break of structure right here, break of structure. Okay, we are creating a bullish institutional order flow, a break of structure right here, and then we are forming something like a range right here. Okay, this entire movement that you can see, let me just adjust this entire movement right here, we are forming something like a range. So it's because of that higher time frame institutional reference point that you're seeing price actually reacting like this on this area, but ultimately we are also bullish in the 4-hour time frame. Okay, so as price is reacting, we want to see it break above here. Okay, once we see price close above this high, let me just show you with the body of the candle, we can say that we have broken structure above here, and then we are ultimately bullish. As it is retracing now, it may retrace back into this particular order block. Okay, touch this order block and then start going up again. But let's watch it from the lower time frame to go to the 1-hour time frame and see what is happening. Still the same thing happening in the 1-hour time frame. Looking at this, let's see it from here. Break of structure above. You can actually see it clearly without any doubt. We have broken structure above right here. Then we are retracing back into this internal range liquidity. So we are bullish on all time frame: monthly, weekly, daily, 4-hour, and then 1-hour time frame. So these are all the time frames that we are bullish on the dollar. Let's look at GBPUSD and see what is happening. GBPUSD. Now starting from the monthly from GBPUSD, you can also do this on Euro USD. You can do it on USD CAD. You can do it on USD Swiss franc, any pair that has the right relationship with the USD, or you can do it on futures such as Nasdaq, S&P 500. All these indices, you can do it on them. Okay, so look at this. From the monthly time frame, break of structure here, we are bearish on this particular asset. What that means is that if the GBP is bullish, then USD is bearish. Okay, but now we are dealing with a strong dollar, which means GBP is weak. That's basically what that means. So let's get into that. You can actually see that price traded and broke structure here and trading back into this institutional reference point. You can see, let's put this fair value gap. Price actually traded into this fair value gap and this particular breaker block that we can see from this level. So price actually traded into this important institutional reference point before pushing down, okay, from this monthly candlestick. You can see it has actually traded into it. So let's go to the weekly and see what is happening on the weekly time frame. The same thing happening, traded into this fair value gap right here. Let me just mark it out for you. Fair value gap, price have traded into it and then even grab liquidity above this level, and now we're trading back into an internal range liquidity where price may have difficulty or may even reach before giving you a bullish scenario on GBPUSD. Is basically this place. Let me show you this order block. Can you see this order block right here? So this is where I think price is going to go before it will give you a bullish scenario. For now, we are actually bearish on GBPUSD. So what are we seeing? We are actually seeing a bearish monthly, bearish weekly. So let's go to the daily time frame and see what is happening, and then we can have a big picture of everything we are doing. So let's get it correctly. So what we have here is also very important. Let's see it and then have an idea of what we are doing. So look at this, a simple break of structure after a complete shift in market structure here, or what you can see here, a complete shift in market structure, what you can call a change of character. But I would like to just mark this place as my change of character because I can see these struggles here. So this is where my change of character is. So as price is coming, I'm actually bearish. Okay, on the daily time frame, price traded into this implied fair value gap. Let me show you. If you measure this from here, this swing, let's say from this swing to this particular swing, let me even adjust it properly so you can see. I want to use this swing. Okay, so price have traded into this implied fair value gap. You know what an implied fair value gap is? This is it. Measure 50% of this and put your line there. Okay, and measure 50% of this to this tail or the wick and put your 50% of that and 50% of this and put your line there. So this is how an implied fair value gap looks like. It is a very, very important concept. So price have traded into this implied fair value gap. What I'm expecting is for price to react because this implied fair value gap is at a discount, or to see price come back to this order block. But what I'm seeing is price reacting from this implied fair value gap, basically this place, just inside here. So this is properly marked out. Price traded into that. Let's go to the 4-hour time frame and see what is happening. Okay, now the daily time frame is eventually bullish for the past 2 days. Let me not forget, we have a bearish monthly, bearish weekly. Then you can see 1, 2, 3 days for the daily time frame on GBPUSD is bullish and have traded into this level. Let's look at what the 4-hour time frame is giving us. You have to be very patient in waiting for these things. Okay, so looking at this, price have given you this indication of going bearish after this break of structure. You can see price has been bearish from this level, traded into this area, this mitigation block, and then price is reacting this way. Eventually we may have difficulty pushing up, but let's go to the 1-hour time frame and see what is happening from this lower time frame. Okay, the 1-hour time frame is giving us this particular picture of the GBPUSD. Price is giving you just a range. It's not properly defined. So in this kind of situation, if I don't see a very well defined price action, I wouldn't want to trade GBPUSD. I will simply try other pairs like Euro, USD if I must trade. And that's one of the important aspects of trading. You must not always trade. So you can actually see that Euro USD is giving you a better picture of trading. Okay, you can see a break of structure right here. Let me show you that. A break of structure right here. And it's important that you take notice of that. So price is eventually going to retrace back into this level. because that's important for you. Measuring from here to here, that's at a premium. Okay, at a premium, that's where you want to take your trade if price is to go back to that place. So knowing that your dollar is bullish from all time frame, and then your euro is going to be bearish then. Okay, so you're going to be bearish on euro USD. I will patiently wait for price to come back to that place. Even from the 15-minute, I'm going to watch it to come back. I want to see break of structure, break of structure, break of structure. This is my POI, point of interest. I can even go back to the 5-minute time frame. Okay, and even trade this bullish movement up to this level before I go bearish again. Now, once we take out this level, we have reached this area and complete shift in market structure. Wait for this price to reach this place that I'm seeing on the 1 hour, then go bearish again from there. So that's ultimately what this gives you, a bigger picture of what is happening. So look at this. We are bearish on foreign currencies and bullish on the dollar. Thank you guys for watching. If you have any question, let me know in the comments. See you in another video.